I think labor arbitrage and the kind of flattening of the global economy is the megatrend for the next several decades. What is the average wage in the United States? What is the average wage in Thailand? Did those wages have to converge? That is potentially very painful for the high-cost countries and very exciting for the low-cost countries.
Amazon is going to allow direct shipments direct out of China now. Is Amazon continue to drive e-commerce, or is it going to kind of turn into this kind of online fair of cheap items?
They are going to build a logistics pipeline straight out of China into the US-based domestic FBA network. That logistics pipeline, they can get it here cheaper. Now, if you're selling phone cases, I would not be very excited. I think it just accelerates what was already happening. It's really hard to pierce the moats that Google has, that Apple has, that Facebook and Amazon have. They're just really good businesses. And I think AI is going to take a lot of cost out of those businesses. So yeah, I would give those stocks to my kids. What's the price of Google going to do over the next 9 months? I have no idea. What's the price of Google going to do over the next 10 years? I'm pretty bullish.
Hey, it's Andrew here, and welcome to the E-commerce Fuel Podcast, the show dedicated to helping you build an incredible business and an equally amazing life. And today, joined by Bill D'Alessandro, a longtime friend of the show, friend of mine personally. And oftentimes we get into one specific topic, try to go deep on that. We're going to do something a little different this time, a smattering of talking about the public markets, the private e-com markets, AI tools we like, if our thoughts on Amazon have changed in terms of its viability for independent kind of boutique resellers over the last year. Get into a bunch of stuff. And we started off talking about Bill's experience with his own podcast, Acquisitions Anonymous. If you're not a subscriber, I would strongly recommend subscribing, checking out the episodes. They do a phenomenal job over there. But a great all over the place discussion with Bill, which I hope you'll enjoy right after this. Bill, welcome back from the beach. You're looking very tan and relaxed over there on your side of the internet.
Thank you. I appreciate you canceling this podcast recording last week while I was at the beach. You were my only thing on the calendar, and I was gonna have to come off out of the ocean. And I was like, Andrew, we're gonna not do this.
You sent me this wildly inappropriate picture of you sprawled out on a beach chair that, burned my eyes. But you're looking much tanner now and more clothed. So
maybe we should have done it. Would drive views for the YouTube channel.
Oh. I think a YouTube channel get canceled on my side, so I'd lose the 800 subscribers we have there,
right?
Which is not that much. Well, like I mentioned at the top of the episode, want to do a little bit of a buffet, buffet style episode, talking about a bunch of things, and I figured it'd be fun to talk about kicking it off. Your experience with Acquisitions Anonymous, like you've got a very well known podcast. You built it up over the last couple of years, a couple of co-hosts. It's in the, as the name implies, acquisition space. But I'd just be curious to hear your thoughts on how it's going and kind of what you've learned podcasting for a couple of years, and like what are some of the big benefits that you've seen from having that show.
Yeah. So for people that don't know, the podcast that I record twice a week, and I'm actually recording right after this, is called Acquisitions Anonymous. And the format is that we have 4 of us that do it. Not all 4 of us are on every episode. But usually between 2 and 3 of the hosts kind of rotate through, which makes it very easy from a scheduling point of view. And every week we review a company that's for sale. So we get a teaser. The reason it's called Acquisitions Anonymous is because we don't sign the NDA. So we don't know the name of the company. We just know the kind of anonymized teaser. It might say, this is a e-commerce business that sells garlic presses, on Amazon and Shopify, and they also sell in Williams-Sonoma or something like that, but we won't know which brand it is. And then, so we'll talk for 30 to 40 minutes about how we would think about buying this business or investing in this business, what we like about it, what we don't like about it. It's kind of like a due diligence talk show, how we might finance it. One of the co-hosts is an SBA lender, Heather Anderson. Another guy Michael Girdley has invested in a lot of SaaS. Another guy, Mill Snell, has done a lot of construction and kind of dirty businesses. And I'm kind of the e-com guy. So we have somebody that has some sort of experience with everything. And I guess to kind of give you a little bit more background too, we've been doing it for 350 episodes now, over like 2.5 to 3 years. We record twice a week. And it's been really fun. And our one rule is that we don't prep. So it is live. We don't do any Andrew's eyes are rolling out his head because it's so much work to do an interview style podcast like this one. So we have no guests. Our rule is we don't book any guests. It's just the 4 of us. And we don't prep ever. So basically we just pull up the deal. Rules. The first minute of we get on Riverside, just like you and I are right now. The first minute is we go through our inboxes, hey, what deals did you guys see last week? And then when we find something we like, we just hit record and riff. We do that for 30 to 40 minutes and in the can.
And
so 150 episodes later.
Your format is brilliant because it gives you automatic. I mean, one of the hardest things about podcasting is coming up with either a topic to talk about solo or finding, guests that you feel like are a good fit. It's just this insatiable monster that never stops. So to have something like a deal market where you can just pick from out there, it's a brilliant, kind of topic strategy and format that lets you do it. What has been the biggest advantage of doing it for you? Like, obviously you have fun with it, but when you think about like personal reach, when you think about business contacts, learning, like, the profitability from potential sponsors, like what's been the biggest benefit for you 350 episodes in?
So what's interesting is like all four of us, we sort of joke that we really under leverage the podcast. I mean, we have 100,000 plus downloads every month. Like it's not a huge industry, but like we're big in our niche, right? But we have never, like, we didn't raise a fund. Like we haven't done any of that. And yes, we take sponsors and we do pretty well on sponsorships. Like it's a profitable business. Acquisitions Anonymous is a profitable business and it's worth our time to keep doing it. But we all have day jobs. So Acquisitions Anonymous is sort of this hobby business for all of us. And so there's like, we haven't done a course, like we haven't sold a Acquisitions Anonymous due diligence checklist, like we haven't sold consulting, like we haven't done all this stuff under the Acquisitions Anonymous banner that you would do if you were really going hard. So I kind of view it as like continually making deposits in the reputation bank. Mm-hmm. And then I think we'll trade on it occasionally. Like if I do a course, I have a platform to promote it. Michael Girdley, my co-host, has done a couple of courses kind of non-related and he's advertised on our podcast. And I think it really helps with his reach. It's less blockbuster than you think it might be, the fame, the side of it, of doing it. I mean, it's like nichey, like searchers all know us. It's cool. Like we got notes from Harvard Business School. We've got notes from colleges all over the country that they use our material in class. We once made a Tempest in a Teapot where we profiled this cruise ship business that was for sale. And we didn't know the name of the cruise ship business. The next week, the CFO of the cruise ship business that it was, apparently he outed himself by putting out this press release saying, "We're not for sale. We're going to sue the guys at Acquisitions Anonymous." And we're like, "We didn't know it was you, but now everybody does." So that we Tempest in the Teapot in like the Alaskan cruise industry. It's so like there's interesting things that come, but like it's not like the flash bulbs go off when we walk down the street.
Yeah. Speaking of, you've been in this and you look at some eComm deals. What are you seeing in the M&A markets? You could go in general, like not M&A is not, I'm talking about like GE buying, acquisitions, but like the businesses that people listening to have, the businesses that you're looking at on a weekly basis. Are you seeing M&A start to come back a little bit? It's been pretty soft. Like what are you seeing in the M&A and the lending markets for businesses of the sizes of, that we are involved with?
Yeah. So I have to bifurcate kind of the whole market from e-commerce because it's a little bit different. The e-commerce market is still in the tank. There's not a lot of good businesses for sale out there in e-com and the multiples are not great. And I'm talking with, our mutual friends, brokers, people who have a pulse of the e-com and M&A market, it is still pretty dead. Like a good business, like if you have a good business and want to sell it, it will sell. You're probably not going to get a blockbuster multiple, but it will definitely sell. It's not so dead that a good business won't sell. But I think all the brokers are kind of slow. I think e-commerce is slow. The wider M&A market is starting to come back a little bit. I would say activity is coming back. Multiples remain depressed. So you kind of had really high multiples in 2020, 2021. And then 2022 happens, kind of the whole market goes quiet, multiples crater. And you had kind of like the really big bid ask spread between sellers and buyers for a long time, right? Sellers still wanted the 2021 price. The market had reset the multiples. And so just nothing is striking, right? Nothing is transacting. And I think sellers are starting to recalibrate, their expectations on value. And so you're seeing businesses start to transact again. So volume is starting to pick back up. High quality businesses are still trading. I've seen a couple high quality businesses trade north of 10 times EBITDA. I mean, it does still happen if it's a really good business. But like when I say really good, I mean like a top 10% business, something that's really, really great. But your average businesses, like the multiples are still, maybe they're up a turn or something from the very bottom, but buyers and sellers are closer to the same page now. And I'm seeing stuff start to transact. And like the lending market is still there. SBA loans are still getting done, less so for e-commerce because a lot of lenders got burned, but kind of like your main street, your manufacturing, your logistics, your, services businesses, like they're transacting now.
Interesting. I feel like the markets are so strange right now because if you look at the public markets, the S&P, it's like been hitting records every day for months now, and so that's very healthy, kind of. But so much of that is driven by such a a small number of tech companies. Really, I think I heard something recently where like all of the gains in the S&P 500 for 2024 were driven by like 3 or 4 tech companies, and a lot of AI, maybe even mostly AI driven. So you have that weird thing there, but then you look at like the general economy. I was talking with some folks who said like they saw fireworks sales were way down this year. This is kind of an interesting, how there's like the Big Mac index, right? Like these are people that are really into fireworks. Mm-hmm. And they're like, yeah, usually my area is just exploding literally with, fireworks going off. And it's been almost eerily silent this year. So you've got like the Big Mac style firework index in terms of people struggling. Financial markets are doing well, but only driven in a small sector. Anyway, it's a weird time. Like any thoughts or things that you make of how the general markets are doing?
It's a weird time. I mean, like small businesses are riskier than big businesses, right? And businesses with moats, like a lot of the big tech companies, are going to trade at higher multiples than businesses without moats. And small businesses usually don't have moats, right? So I think what it is we're still very much in the tail end of this, to use investment banker speak, kind of flight to quality, right? People don't want as many speculative assets. They want things that are really rock solid, good businesses. Right. So the stuff that is the top 10% businesses, the Amazons, the Facebooks, right, et cetera, are going to continue to attract capital. The stuff that's more subject to the whims of, how healthy is the consumer, or, our interest rate's going to stay higher for longer. Like the more risk ticks you put on it, the less people are going to be interested in. People are still very interested in quality. And also rates are still up, right? So there's much less availability of debt. Like right now, you can't pay more than 3 to 4 times EBITDA for a small business if you're going to use an SBA loan, because your debt service coverage ratio won't pencil, because you're going to pay 10% plus interest on your SBA loan. So the treasury rates being at 5% plus, it really slows down the low end of the market that is financed by SBA debt.
Yeah. Are you still as tech heavy as you used to be? I mean, in past episodes, I know that you've been like very heavy on kind of some of the FANG, the Facebook, Apple, Google, especially as like a huge percentage of your portfolio. Are you still pretty heavy? Because I mean, if you look at like, they've just done so well. You look at NVIDIA, that's kind of the bookend of the market though, right? But like, are they the biggest company in America? If they're not the biggest, they're one of the top 3, maybe top 2.
They are.
And
yep.
Which is crazy. They just came out of left field and you talk about companies that had a good run and lined up things well over the last 10 years. But anyway, like, yeah, I guess the question is, are you still as tech? I would be a little nervous being as, very tech heavy now, just because they've had such a good run. And it seems like they're it's a little frothy there in those like kind of big tech macros. Anyway, are you still as tech heavy as you used to be 2 years ago?
Luckily, yes.
Luckily,
yes. But I still am very bullish on tech. I mean, I think it is my opinion that most of the gains of AI are going to accrue to the giant tech companies with moats. I think it's really hard to pierce the moats that Google has, that Apple has, that Facebook and Amazon have. They're just really good businesses, right? Straight up good businesses. And I think AI is going to take a lot of cost out of those businesses. I think they are going to be on the leading edge of it. I don't see a world where, Google or Amazon don't win in AI, or Apple doesn't win. So yeah, I continue to be overweight tech. I will give those stocks to my kids. I in the long term what's the price of Google going to do over the next 9 months? I have no idea. What's the price of Google going to do over the next 10 years? I'm pretty bullish.
Interesting. Man, we should do an episode at some point about if you should break up big tech. I think we probably have different opinions on that. That'd be a fun one to do. I've talked about Bitcoin. We've had very different opinions on Bitcoin in the past, which has been fun. And I feel like for me, looking at it, I've been probably a little over heavy crypto. You've been a little over heavy tech. And been glad I've done that up to now. But when I look at Bitcoin now in the markets, I feel like the expected value payoff for it is significantly less than in the future, or than it was in the past. And I'm thinking about, maybe shedding maybe like a third of the position there. I still want to hold at least half of it long term. I still think there's a world where it makes a ton of sense. But you look at a couple of things. One, just as things get bigger, it's harder for them to get bigger. So that's one of the reasons, like you look at NVIDIA, you look at Apple and Google, and I think you're right in a lot of your premises. But for something to go from $2 trillion to $4 trillion is just so much harder than it gets harder to double as you get bigger. So that's the one thing. But I also think all of the institutional capital that has come in was really good for Bitcoin in the short term. But if you look at retail investors, when stuff gets hard, they freak out. And the first thing they're going to freak out about is Bitcoin. And so Bitcoin's always been very volatile. But I feel like if it's possible that Bitcoin could get even more volatile in a downturn, I feel like now is the time, because you have all these people that only bought it because they could buy it through Fidelity, don't understand it. They don't have the conviction of all the holders of the last 10 years. And I could see it being having probably some of its craziest crashes ever in the future, just speculating. But anyway, I'm sure this will make you very happy because you've been long term. We've been on opposite sides of this coin, but I don't know if you think you have any thoughts in there.
Just so I'm clear, are you saying that Bitcoin might not be a store of value? Is that what you're saying?
That's not what I'm saying at all. That's not what I'm saying. You completely are misrepresenting my words. I'm 100% saying it's. I forget that this is your issue with the whole thing, which I think is funny.
So I think Bitcoin and crypto writ more broadly, super cool, interesting new technology. The best thesis on it I've ever heard comes from my friend Travis Jamison, who I think you know, which is that Bitcoin works just as well at 60,000 as it does at 6. There is nothing inherent in the value proposition of it that says the price has got to go up for it to fulfill every single promise of what it is, because it's infinitely divisible, right? Oh, well, there's only 21 million coins. No, there's 21 trillion Satoshis or whatever. There's the supply is finite, but it is so large that you can just divide it by, it's infinitely divisible, right? So you just keep dividing it. The supply of Bitcoins is in fact infinite, of units of Bitcoin that you can buy. So and functionally, it also delivers the same value prop. I can send you, whether I send you 0.0001 Bitcoin or 1 Bitcoin, it still works great for all of the things that are awesome about Bitcoin, right? And in fact, and now if you go to something like Ether, it actually works better when the price is lower because the gas is cheaper, right? So to use the network is cheaper when the price is lower for Ether, et cetera. So so Travis, and I'm cribbing Travis's thesis, it is 100%. The value of these digital assets is 100% hype cycle driven. It's raw emotion and animal spirits, period. And they're going to gyrate all over the place. And just because they gyrate does not mean that they're not really useful for a lot of things, right? And that doesn't mean that they're not a really interesting innovation. It doesn't mean that it won't challenge the dollar or other large currencies in certain use cases. But there is none of that means the price has to go up.
That's true. But I take a little bit of, take aim a little bit of the thesis of it. It's completely infinitely divisible. And so therefore it doesn't matter. You still have, if you want to have, I think the most powerful thesis for Bitcoin still is you look at how fast we're racking up our debt for the US. Like if it was an issue 20 years ago, it's just a building on fire right now for the US government and a lot of other developed nations in the world. And I still think the best thesis for Bitcoin is it's so far hasn't been hacked. It's something that can't be messed with by politicians. And therefore it's something you can put your money in and be able to transport it easily around the world in your brain. But from the divisibility standpoint, if you have $5 trillion that's going to want to pour into a market, the fact that it's infinitely divisible at a decimal point place doesn't solve the problem. They're still going to create the demand and create the upward pressure. So I don't see that as being a big, great argument against its use.
I only bring it up because so many people say, well, there's only 21 big, and they cite this, like the supply cap as this major value driver, which if the supply is even if it's finite, if it's bigger than, like, nobody knows how much capital 21 million Bitcoins can soak up, right? And just because a lot of capital goes in doesn't necessarily mean that that capital doesn't go out the other side, especially if you're talking about a dollar devaluation scenario. Like, you don't just stick all your money in Bitcoin and then not spend it, or use it, or, again, it doesn't matter. The price of Bitcoin does not matter to the utility of Bitcoin at all. Bitcoin can still maintain all of its awesome utility at $1 per coin.
So another thing I wanted to talk about was Amazon. So we had a very good-natured but very direct debate about Amazon, the future of Amazon. We'll link up to that in the show notes, maybe a year ago or so. I'm curious if you, and kind of, I think if you had to summarize it, it was is Amazon going to be a great place to sell in 2 to 3 years for merchants? Is it going to be continue to drive e-commerce, or is it going to kind of turn into this kind of, online fair of cheap items? And what's, are most merchants going to want to sell there in 5 years' time? So I'm curious, have your thoughts on Amazon changed at all after our debate last year? And like, you also think about, like, the news just came out that Amazon is going to allow direct shipments on, for Amazon Prime direct out of China now. Anyway, thoughts on, are you still have your thoughts are they still the same where they were a year ago on Amazon?
Pretty much. And it's important to parse the recent news that came out about Amazon launching their kind of Sheen, Temu competitor, right? They know that they're getting their shorts eaten by the Temus of the world. It is my opinion that the way this is going to look is that Amazon is going to look to leverage the moat that they already have, which is their US distribution network. So they've been doing this. I don't think this is new. They've been running Project Dragon Boat for 10 years, where they say your margin is my opportunity. And the your in this case is all US brands who are buying from China, right? They have already drank our whole milkshake as far as P&L and margin extraction. And so then they're looking at the COGS line item and going, how do I get that margin too? And the only way is to cut out the American brand, right? So they've been doing that forever. There's 5 Amazon innovation centers in China where they train Chinese factories how to get on Amazon. Like, this is not new. So I read that announcement as, please help our stock price. We do have a plan, we swear, to compete with Temu. And just a crystallization of, they are going to build a logistics pipeline straight out of China into the US-based domestic FBA network. And the AGL network, they already are running their own airplanes. Like, that logistics pipeline, they can get it here cheaper than Postal Service or whoever else can get it here. And so they, I think, want to be the conduit to America for those factories. So that's how I read that, and it's going to bring a lot of sub $10 metaphorical junk, right? Now, if you're selling phone cases, I would not be very excited about this. If you're selling charging cords or whatever, this is not good news for you. But this was already happening. Like, you were already up a creek if you were selling phone cases on Amazon, right? This is not new. So I think it just accelerates what was already happening.
It does. I think if you look at a brand, though, I saw a really good video this last week, and subconsciously, I think this is all obvious to us, but it vocalized it really well, in that a brand is the associations that you have, all these little associations, and it builds trust. It doesn't build trust. And I think if you're Amazon and you're increasingly making it easier for low-cost items to come into your market, items of some quality, sometimes dubious quality, sometimes well-certified, sometimes dubious certification, it just seems like, to me, it accelerates Amazon being the place where you either buy, Apple AirPods that are sealed and they're, you trust Apple, or you buy your, $10 tchotchke that you don't care if it breaks after the holiday is over. But most people listening to this are in neither of those categories. They have something that is branded, but isn't nationally branded. And Amazon, I think, is just going to be harder and harder, because those people in the middle, they're just going to continue to just squeeze the life out of them on a fee perspective. So I don't know. I see this as just accelerating. Yes, it's good for Amazon's short-term market share, but I think long-term it hurts their brand. I think it hurts their credibility. And I think it makes it less likely that, brands in, like, let's say the $5 to $25 million range sell on them consistently in 5 years.
Well, I think what you have to do is 2 things. One, you have to separate your feelings about, like, what is good and right and aligns with my vision for the future. You have to separate your feelings from those feelings from what macro forces are at play in the economy and what is the future going to be like. And I think you also should take an opportunity to zoom out and say that it's my opinion that there are macro forces in the economy that are driving e-commerce to either Apple AirPods or $10 tchotchkes you throw out after Christmas, right? There is this bifurcation, and that is much bigger than Amazon. I mean, if you were Walmart or you were going to Shopify Marketplace or whatever, consumers either want straight from China, unbranded, cheap as possible, or heavily branded, pay up, metaphorical luxury goods, the Apple AirPods, right? The Apple AirPods, technologically, not a ton different, right? A lot of these categories are bifurcating, and Amazon is reacting to that demand. I mean, you can't say it's not. Look at Temu, right? Like the consumer wants it, and Amazon's reacting.
Yeah, I think there will be a smaller, I think you're right. I think that it's undeniable to say that middle ground will become smaller, but I absolutely think that we will have that middle ground for the foreseeable future, if not forever, in commerce. Some of my favorite items are products that don't fit into that middle, that do fit into that middle category, either because they're so niche enough and quality enough they couldn't be a national brand, or they wouldn't be able to be produced by, something coming from Temu. So I think you're right. I think that will get smaller, but I think it's always going to be there. And I just think brands that are in that shrinking category, Amazon's going to be less attractive too.
So I agree with you. There's lots of really great boutique items, right? But I think that is not a stable equilibrium, is that boutique item existing, right? Because if the market is big enough, Temu is going to take it, right? It's going to get knocked off in China, and it's going to get sucked into the sub $10, right? All the margin will get sucked out of it, right? If the market is not big enough, it is definitionally sort of not big enough, and you're going to struggle to build a business on that quicksand, right? It's just the little patch of ground you're on is not big enough. And if it becomes big enough, Temu's, the Chinese direct-to-factory, is coming for it. And the less and less friction Amazon takes out of the value chain from China, the smaller and smaller islands they will come take, right? So the size of the island that Temu won't come take is shrinking and shrinking as all the friction goes away. So what's unfortunate for people like you and me who love a great boutique product is, and again, this is where you got to separate your desires for the world with, I think, what the economic forces at play, which is that I think it's going to be really hard to be a boutique brand, like, because if you get any scale at all, the Temu, the metaphorical Temu piranhas are coming for it.
Yeah, I think that scale though, but I mean, you can think from a scale like that. I mean, if you can, a $5 to $10 million business is not a large business. Everything's relative, but in general, it's not a large business. But it can provide a phenomenal income for somebody while creating an amazing product, and do it in a way that Temu or Amazon isn't going to be able to knock off, depending on the product. And I think you're going to have to be more careful. There's a great interview with Bernie. I appreciate the intro or reintroduction to him, where we talk about, either came out or will come out in the very near future, about how you have to be more strategic about competing with products coming out of China. But I still think it will still be possible. So we got 6 minutes left. I got to ask you one last thing here. AI. I saw the tweet that you shared about a guy in a room with a VR headset. Brought the visions of when we were doing the plank walk at our little retreat with our families in Florida. In Phoenix. That's crazy. If you've never done the plank walk on like an Oculus, would strongly recommend it. If you think you're very rational and your mind is completely irrational, go do the plank walk. We put a VR headset on and you try to walk out on this plank in VR, which is not real, up at 50-story building, but your brain still will barely let you do it. It's crazy. But in your tweet, this guy is in a room with his VR headset and he's stocking the shelves of a convenience store, and he's controlling a robot. He is overseas somewhere. The robot is like, I don't know, in Vancouver or something, or Toronto, stocking the shelves of a 7-Eleven or some kind of convenience store. And kind of crazy to see. I mean, that was wild to me, because it seems very futuristic, but I think the sentiment of your text was along the same way. But I could see that actually catching on in 5 years and putting people out of work, which is from a labor perspective. Anyway, kind of hadn't thought about that, but it was wild to see it in action.
So that the tweet of somebody remote controlling a robot from a foreign country, the robot being in the United States, was basically about labor arbitrage, right? And I am really, really convicted that labor arbitrage is the mega trend of the next several decades. like in the economy, like in the same way that the internet was a mega trend. I think labor arbitrage and the kind of flattening of the global economy is the mega trend for the next several decades. And that tweet was actually talking about how having low latency internet halfway around the world, from Singapore or from Thailand, wherever, so you can actually have low enough latency to drive a robot, right? That is going to transform so much, because that guy in Thailand makes $3 an hour, and now he can stock shelves in the United States where he would otherwise make 15 or $20 an hour. The arbitrage is just so big, and knowledge work goes first, right? But then this is kind of illustrating that it doesn't have to stop at knowledge work as robots get better and with low latency internet. So, I mean, I think every business, it can be a huge opportunity, right? For a lot of businesses. You got to be asking yourself, how is my business, my P&L impacted if the global price of any specific task converges to the same number? Right now, the cost of a logo designed in the United States is very different than the cost of a logo designed in Thailand. That gap is closing quickly, right? With all the Upworks, et cetera. The cost of a mobile app built in the United States has been different than the mobile app built in Eastern Europe, and so on and so forth. But as those things converge, right, still the cost of a shelf stocked in the United States is very different than a shelf stocked in Thailand. But the cost of that is converging. And it's not just going to hit a business's P&L, but what does this do at an economy level? Where what is the average wage in the United States? What is the average wage in Thailand? Did those wages have to converge, right? As they converge in all the different fields, driving a truck, painting a picture, doing Excel, like whatever you do, and let's leave AI out of it entirely for now, and just talk about as arbitrage disappears, right? As the world gets flatter, it seems to me as though the average wage in the low-cost countries needs to go up and the average wage in the high-cost countries needs to come down to meet at some sort of equilibrium, right? That is potentially very painful for the high-cost countries and very exciting for the low-cost countries. And the ripple effects of that, I think, are going to be very, very massive over the next couple of years. Decades.
No, I think you're right. And I think, specialization aside, I think that's where it comes down to, right? Like countries need to increasingly specialize, and quality of output aside, yeah, you're absolutely right. I think those are going to converge. In 60 seconds, because we have 60 seconds left here. Any AI tools you've been using that you've really enjoyed? I have been using Claude a ton for writing. ChatGPT, of course. I found Claude. I love the memory, the additional memory Claude seems to have in terms of pasting things in. We've also been trying to use it a lot to repurpose things for social media posts, for writing, for things like that, like taking a podcast transcript, trying to create social content for it. And I've been really disappointed with the results. It just always feels like there's something that always feels like it has the AI fingerprint and doesn't have the tone you want. So still working on that. There's a tool called spiral.computer. I'm curious to try. It claims to be a lot better at that. And so I'm excited to dive into that and see if it's helpful. Anyway, I've been disappointed with the writing efforts there. On your side, anything you're using and loving?
Not really. I mean, to be honest, like we use Claude to do some writing, but for the most part, it's not turning my world upside down. I use Perplexity, like instead of Google sometimes. Yeah. I use ChatGPT instead of Google sometimes. It still, to me, feels like kind of a hammer looking for a nail in a lot of business, but then you read about like customer service, it's coming hard. Like we do use it in customer service. We use Rich Panel, which has built-in good AI, which I really love because it cites its sources. It's trained on like a year of our tickets. And then when you press AI Gen answer, it cites like the 3 tickets that it read from 4 months ago to generate the answer. So it's not hallucinating, which is pretty cool. But that's the biggest place for us right now. I mean, I was at Steve Chu's Seller Summit a couple months ago, a lot of parlor tricks, a lot of people trying to generate SEO content, a lot of people writing newsletters, but nothing that it's like, I'm doing 100 million in sales with 2 employees yet.
Yeah. In some sense, actually, in the short term, I was disappointed AI wasn't doing better on the writing front. In the long term, it kind of was a little bit of a relief because I like a world in the future where everything is not AI content, where you can't tell, because it just seems like a better, realer future, especially if you're a content creator and you care about humanity. Yeah. So that's short-term disappointed efficiency. Long-term makes me a little hopeful that we're not going to enter, just land of the robots quite yet.
Not quite yet. It's coming though. I read about the Wait But Why has a great piece that you can read. This from like 6 years ago, and is like oddly prescient about fast takeoff versus slow takeoff in AI. And if you're familiar with Wait But Why, it's always very, very thoughtful. And he polled, like 80 of like the prominent at the time AI researchers, of which like several of the names you will recognize from OpenAI today. So he had a really good cross section. And like their handicap for like, when do we get artificial superintelligence, like averaged out to 2040.
Wow. Interesting. Well, it's funny because like you talked about how we're finally starting to get real arbitrage of labor skills. And Thomas Friedman wrote The World is Flat, like 2000, 2003, something like that, like early 2000s. And he was talking a lot about these trends, but they weren't at maturation with the technology. It took 20 years to get there. And here we are finally seeing that happen. And I think the same is going to happen with AI. Bill, always fun. This was fun riffing on a bunch of topics. We'll have to do this in the future where we have a bunch of grab bag. I like this style. So thanks for coming on. I'll let you get to your next thing, but always love doing this, man. So thanks for making it happen.